Mortgage industry doesn't want you debt-free. They want you leveraged, locked in, and looping. Refinance, cash out, re-leverage. It's not advice, it's the business model. Because the truth is, banks don't make money when you own your house. They make money when you own it. And the whole system is baked to make sure you never actually get to the finish line. Here's the pattern. You buy a home, get a 30-year mortgage, and a few years later, rates drop. And what do they ads say? Refinance and save hundreds. You sign the papers, restart that clock, and boom, back to year one of the new 30-year loan. The average homeowner now in America refinances every 6 to 8 years, according to Freddie Mac. That means that most people never actually pay off their mortgage. They just keep rebooting it over and over again. And that's the point, because every refinance generates new fees, new interest, and new profits for the lender. They don't care about your savings, they care about your balance. Let's run the math. Over the last 30 years, the average American mortgage rate has hovered around 6.8%. But here's what's wild. Even with rate cycles, the total debt just keeps climbing. In 1990, the US mortgage debt was $2.5 trillion. By 2000, it hit $4.8 trillion. And today, over $13.6 trillion. That's a national scale leverage, and it's getting worse because 63% of US homeowners currently have a mortgage, the highest proportion in over a decade. It's not that people can't pay them off, it's just that the system rewards keeping you in debt forever. Refinancing isn't evil, it's just marketed like a gift when it's actually a trap. In 2020 and 2021, record low rates triggered the biggest refinance boom in history. Over 14 million homeowners refinanced during those years. Sounds great? Lower payments, free money, except banks made during that period $12 billion in origination fees. And the average homeowner added another 7 to 8 years back onto the debt timeline. Except banks made $12 billion in origination fees, and the average homeowner like you added another 7 to 8 years back into the debt timeline. That's how the industry wins. Every time you refinance, you think you're saving, they know you're restarting the clock. And then there's the cash out refi, the favorite move of every build wealth through your home commercial. You tap into your equity, take the cash, pay off debt, maybe remodel. But what you really did was turn equity into new debt and gave the bank another reason to collect interest. In 2022 alone, Americans pulled over $430 billion in cash out refis, and the average loan size jumped $60,000 compared to pre-pandemic levels. So while the talking heads on TV say homeowners are wealthier than ever, the reality is most of that wealth is just recycled leverage. You're not extracting profit, you're just repackaging debt. And let's be clear, banks aren't in the housing business, they're in the interest business. On a $400,000 mortgage at 6.5, you'll pay roughly $510 in interest over 30 years. That's more than the house itself. Now multiply that by 77 million active mortgages, and you'll see why this system isn't built for you to pay it off early. If everyone became debt-free tomorrow, the entire financial system will seize up. So the industry sells you financial flexibility instead, new debt with better branding. So debt is the product, and you're the consumer. And the longer you stay in the system, the richer the system gets. So the next time someone says, just refinance, take out the cash out, reinvest it, ask yourself, who's really winning here? Because the mortgage industry isn't cheering for your freedom, it's banking on your lifetime of payments. This is Thrive Network. Comment below. Would love to hear your thoughts. Click like and subscribe, and we'll see you on the next one.